We are not financial advisors, nor are we broker-dealers. Securities used in these videos are examples only. Investing comes with risk. Investing options also has risk. These demo accounts may be used, but they are for training purposes only. Testimonials may be offered. Don't expect the same thing. Remember, we're all here as peers helping peers. This is not professional advice. We're here to help each other. Enjoy.
Okay, while Andy's getting set up here, I'll just give y'all a little bio on Andy. Andy is also known as the Andy. I think all of y'all know him by that. And I've recommended he go out to Hollywood and start making movie film with his little things he did this morning. It was very good. So he's known as the Andy to most of us on the online community, and he started his venture in trading about 8 years ago. That was after starting his education with the live Invest Tools seminar. I'm assuming that was in Florida, Andy, where you started? I was in Florida. Yeah. So Andy now leads the Real-Time Trades group, a very popular group that I myself subscribe to and watch a lot, along with his co-chairs of John McLean and Jack Gelling. I think they're here. If they just stand up one more time back there, John and Jack. Yeah, give them a hand. And also Andy has a bigger role. He also supports group leaders across the continent as a community ambassador. So that's quite a bit above the level that most of the group leaders are in. Okay, this year the Real-Time Trade Group has decided to focus on long-term investment strategies, similar to what you've seen with Brett here, with a foundation that is built upon what Brett just discussed. Along with that, they've got all their tools and their rules and anything you need to trade what you've seen up here with Brett, with a little different twist on it. So Andy's going to discuss the background of his group's focus as well as the methods they're employing. So you'll see all that. And this should be a very, very nice presentation. I'm sure you're going to enjoy it here.
Hey, sorry about that. Can y'all hear me okay? How about now? Is that better? All right. What I wanted to talk to y'all a little bit about today was how the Real-Time Trades Group is implementing a lot of the stuff that Brett just talked about. And if the sound isn't coming across well, let me know. I can switch to the other microphone. A little bit of history. We started this method just this year, and the way I got into it is I was originally pointed to Brett Pattison's Friday Capstone by Matt Haley, and then it was later taken over by Tyler Thomas when it finally became the Friday Trading Room. And what I liked about this strategy is it really fit in well with what I consider is probably not an atypical 401k account or 403b account. Specifically, what I was looking for is something that we could trade in that environment and still profit based with the limitations of what that kind of account offers. I'm sorry about the feedback. Hold on just a second. How's that? Ah, there we go. Much better. All right. Anyway, so what I was interested in doing is putting together something for myself originally that worked well within a 401k account, or a 403b account is very similar. And had a lot of limitations, still do, with my own 401k. Specifically, I could only trade stocks and ETFs. Okay, we cannot trade options, we can't trade futures. There's no shorting of stock, and we cannot trade with margin. So I wanted something where I could set these same limitations that I had in my own 401k account was something I could share with others once I was able to prove that it did work. One other thing that I wanted is something that fit within the time constraints. In my opinion, the 80% of your portfolio, and this kind of falls in line with some of the stuff that Brett was saying where you don't overtrade it, should not occupy 80% of your time. The 80% of your time is spent with the income trades or playing with the kids or the grandkids or anything else. The short period of time should be what is spent on the larger part of your portfolio. So as I worked with this throughout last year, I proved it could work, so we started doing it with a real-time trades group, and that's what we're going to talk a little bit about today. In the real-time trades group, we set up with 6 basic goals. We've got a one-page trading plan, and of course, that's the name of the file, and logically, this is page 2 of that. So we start out, we've set up with six basic goals. You may argue that 2, 3, and 4 really aren't goals, they're methods for achieving them, and that's fine, but they were important enough to where I wanted to include them into kind of the core material or the core basis of what it is we were trading. So the 6 goals, of course, were beat the benchmark and grow our account. We are using the ACWI as our benchmark. And you can read the methods that we plan on reading, or methods for achievement on your own. I'm just going to run through these. Number 2 was select the strongest stocks and ETFs to buy. Number 3 was to stay with the stocks as long as they're outperforming, uptrending. And number 5, keep the task simple. As I said before, I don't want to make this a full-time job. This is something that we want to get into. If we're fully invested, it's probably 10 or 15 minutes on the weekend to take a look at it. If we're not fully invested, it takes a little bit more time to do the additional analysis. But still, it's not a full-time effort. We're trying to keep the time that we spend on it limited. And finally, goal number 6 is to limit the frequency of modifying our trading plan. Now, I can't speak for everyone, but I suspect I'm not the only one who's had a trading plan. You go in, and every time something doesn't work about it, you go in and make modifications to it. I learned the hard way that that doesn't work. So I tried to set up the trading plan that we're using in our group as something that would work for the long term and not need to be constantly adjusted. We may sometimes go in and adjust our method of execution within the confines of our trading plan, but the trading plan itself, so far, it hasn't been, it's not something we've had to modify. Now this, I'm going to talk a little bit about how we invest, and this is going to be a little bit of repeat about what you just heard. That's not a bad thing. It's a repeat because this is very important to understand. This is kind of a chart that I put together. It's not numeric, it's more notional, but it kind of illustrates as you start with the ACWI, you work your way over to country class. If my benchmark is the ACWI, my opportunity and risks, my opportunity to beat the benchmark is very low, if that's the only thing I'm invested in. If I'm, at the same time, my opportunity for beating it is very low, my risk of losing or losing more than it is also very low. Conversely, I'm fully, my account is, the correlation of my account to the benchmark is obviously completely diversified. You know, they're one for one. So what I was looking for was that comfort zone. And what it's doing that, I want you to do. Is that comfort zone. And what I did is I worked across and I looked at the different things. I looked at starting with ACWI, going to country classes, which is what I'm calling the EFA, the EM, the SPY. Going over looking at countries and sectors. And what I found, the comfort zone that seemed to work the best for me was in that area where I'm really drilling in on countries and sectors and some stocks. So that's kind of how we, or not kind of how, that is pretty much where we focus our trades. So the next step in that is the entry criteria. Now, as we start on the left where the ACWI is, and work to the right, you're going to see that the entry criteria gets a little bit stricter at each step of the way. For example, if I'm investing only in the ACWI, really all I need is a bullish market sentiment. I need to think that the ACWI is going up. I'm safe to invest there. You know, that's about as far as it goes. We actually use the ACWI in our group paper account to as kind of a savings account. If we have free cash, we don't have a place that we're ready to invest it elsewhere, we can drop it right in the ACWI. And as long as we're bullish, that's a good that's as good a place as I need to be. It's better than being in cash. As we work to the right, I'm going to stop hitting that button. As we work to the right, we get to the country class ETFs, again, EFA, EEM, SPY, and so forth. These, their only real requirement here is if we want to invest in those, they have to have higher relative strength than our benchmark does. Then we get to countries and country ETFs and sector ETFs. Same, once again, kind of building on that, we have to be bullish. We have to have better relative strength, and then the next step is we're looking for that good channel, a good entry point within the channel. Ideally you're right at a support level. Not critical that you be right at a support level, but you want to be at least a little bit in the low side of a climbing channel. And then lastly, I'm going to stop hitting that button, I promise. Lastly, we get stocks. Stocks require everything that we just described, and also requires a good technical entry signal. So that technical entry signal could be inverse head and shoulders, bull flag, bounce off support, whatever technical signals that we like, but it has to be a good technical entry. So as we go through, basically we start looking from the ACWI, and again working our way to the right on that graph. And again, are we bullish on the ACWI? We look for the strongest stuff at the next level down. From the next level down, whether it's the SPY or EFA or EEM, we look at the next level, whether it's individual countries or sectors within sectors within the SPY. And then we go down to the next level yet. Is there any individual stocks that look like they're beating everything overall? That's kind of the approach that we've taken. And this is really aligns to goal number 2, if you recall, which was select the strongest stocks and ETFs to buy. Want to talk a little bit about exit criteria, and I'm going to jump from entry to exit. Quick summary of a little bit about our group. Then if we have time, I want to go through a couple of our tools. But so exit criteria. We like to use, in our group, we're using decision points. We don't use mechanical stop losses. We're not using them for anything, actually. Now, to me, a decision point is similar to a stop loss. The difference is it doesn't mechanically take you out. And part of that keeps you from getting, or keeps me from getting whipsawed with trades. We've seen a couple times in the recent market where there've been it's just a huge intraday drop, and then it bounces right back up. I hate it when that happens. My decision point keeps me from being taken out. And it lets me go back and make an informed decision when that point gets violated. And again, it's not the day it gets violated, it's the weekend when I'm doing the trading. I can go in and assess where that stock is and decide, do I want to get out? Do I want to reduce my position? Frankly, if it comes back, if it violates that decision point, clears 3 support levels, and then bounces real solid off the 4th, my decision may be to go buy more. So this is the difference between the stop loss versus the decision point that we use, and it helps keep us in the positions a little bit longer, at least the way we've been trading it. So I want to talk a little bit to explain that, if I could. Because when we first started the group, there was a lot of discussion about decision points. Some people don't like them. I personally don't like mechanical stop losses. Not saying one is better than the other. They work different. Different people are going to be happy with different things. But what I want to do is kind of illustrate how our decision points are set.